Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, we're going to talk about mortgage rate. There's a lot of changes this week. There's a lot of new lenders that have come on with the best deals. There's some rate increases. There's some rate decreases. It's a really, really busy week on this. Now, every week we do this video where we look in the market for different types of mortgages that you might need. For example, this first slide is about HMOs, which is a house of multiple occupancy, which is a bit like a student accommodation. We're going to look at buy-to-lets in your personal name, buy-to-lets in your limited company name, residential mortgages with big deposits and small deposits as well. And so this just does the legwork for you. So if you're looking for a deal, this is where you can start, or if you're using a broker, point them in the direction of these deals, and maybe they can get these deals for you too. Now, before we jump into this, as always, if you haven't done it already, do subscribe to the channel over there. We've just hit 23,000 subscribers, so thank you for everyone that's subscribed. We've had so many subscribers in the last few days, and if you haven't done, make sure while you're here, you also smash that like button or tickle the like button. Do something to the like button down below. Make it change colour. That really helps us with the YouTube algorithm. It helps the channel grow. And it means you're just an all-round good person for doing it. So let's look what's going on in the market. Well, the market has changed. And there's various different reasons for that. The Bank of England had their meeting last week. That was fairly positive. They talked about rates coming down. They talked about inflation data. But since then, we have had some lenders that have cut rates. We had TSB and we had the other one, trying to read it backwards, Empowered Mortgages as well. They also had some good deals out there. So they were options to go and look at. But a lot of lenders prior to the Bank of England data put their rates up, and they haven't reacted to the Bank of England data yet, or they haven't started to have a price war. So let's look at what is going on. So HMO mortgages is first. They've got a little bit more expensive. The Mortgage Works is one of the main lenders for HMO mortgages. They've put the rate up this week on a 5-year deal. It's gone up to 5.54%. The fees with Mortgage Works at the moment are quite high. They have come down. They were at 5 or 6%, but they're now still at really quite high, 3% fees. Loan to value is 75%. Now, on a 2-year deal, it's the same as last week, 5.39, and the 3% fees as we've had before. So, limited company mortgages. Now, this is how you should be investing going forward. So this is what I recommend you look at if you're going to be a buy-to-let investor. So new deals work way better in a limited company. You've got way more tax deductible things. They're more beneficial if you want to pass them on to loved ones in the future and stuff like that. So the Mortgage Works have also increased the rates here, same as the HMO one. So it's gone up to 5.54% with 3% fees, 75% loan to value. 2-year deal is the same, it's slightly cheaper than the HMO deal, 5.29%, 3% fees, 75% loan to value. NatWest are really crushing it on the buy-to-let in your personal name. So lots of people have buy-to-lets in their personal name. More than 80% of the market is still in a personal name. So the 5-year deal as well has gone up, but NatWest are still the cheapest in the market. So the 5-year deal has gone up a smidge, 4.57%, 995 in fees, 75% loan to value. The 2-year deal, again, has gone up a smidge. These aren't going up massively fast, but it's not good to see things going up at all, is it? 4.97%. This has increased to with 999 in fees and 75% loan to value. Now, we've got some more deals to go through here, but what I would recommend is if you have a deal, whether it's a buy-to-let or a residential mortgage, and that deal is expiring in the next 6 months, you should fix now. Because as you can see, since last week, rates have gone up. Now, they might still keep going up. So let's just say you've got a deal that expires in September, you can fix the rate today. So you could go to NatWest, you could say, I like your 5-year deal, 4.57%. I'll take some of that. Now, if between now and September, when that deal starts, the rates drop and NatWest drop their rates, you can then switch on to the lower rate. However, if they increase the rates more, that's okay. You secured the better rate for yourself. That is really, really important that you do that here. And so share that news with people. Do share this video. If you haven't shared one of my videos before, it's really easy to do. Just below here, maybe you're watching on a phone or a laptop, doesn't matter. Click the share button and then it will allow you to share it via WhatsApp, Facebook Messenger, email it to someone, however you want to do it. But let's get more people knowing about that, because if interest rates do go up, if inflation does stick longer, then at least get the best rate that you possibly could. You don't have to wait to the last minute. So the residential mortgages, these have changed. Both lenders are new in this week, but the rates are more expensive than the previous lenders who have dropped out being the cheapest. So Nationwide have got the best 5-year deal, 4.55%. It's gone up a smidge. The fees are 995. The loan to value is 75% on this, meaning you either need a 75% deposit or 25% in equity in the property is more likely, isn't it? So the 2-year deal has gone up as well. It's a bit more expensive than last week. It's 4.89%, which is up a smidge, and the fees on that are 999. That's with Barclays Bank. 25% deposit or 25% equity required on that deal as well. So those are two lenders that you can go and look at in that scenario. Now, on a residential mortgage with a small deposit, maybe you bought and you want to refinance and you've only got 10% equity, or you're buying somewhere and you've got a 10% deposit. This is the bank to look at. First Direct, a 5-year deal is 4.78%. It's a bit more expensive than last week's best deal, but the fees are 999. The loan to value is 90%, meaning 10% deposit. And they also have a 2-year deal, which is the same rate as what the best deal was last week, but the other lender has put their prices up. So the best 2-year deal is 5.23%, 999 in fees, 90% loan to value. So that's what's going on in the property mortgage market. What do we think is going to happen going forward? Well, we had some wage data this week. That wasn't great. Wages were up 6%. That means the Bank of England is going to be a little more reluctant to drop rates in June, which is probably why we saw some rate increases here this week. And we're going to be waiting until the Bank of England does drop. So hopefully they'll drop in June. Maybe they'll drop in August. Who knows for sure? But when they do that, I think you'll start to see the market get flooded again. So you might not see the mortgage rate drop. But leading up to that, I do think you might start seeing a little bit more competition, because transactions are down again. Less people are buying houses, and there's a few reasons. One, I did a video about stamp duty. They're saying they might drop stamp duty. That's going to mean some people will pause the transaction and wait and see what happens. And also, there's tons of people waiting for the Bank of England to drop interest rates. So maybe they want to buy, they're ready to buy, but they want to see those rates drop and see what happens before they delve into the market. That will slow transactions down. That means banks might get competitive again. But when the Bank of England, ironically, does drop interest rates, there'll be a surge of buyers into the market for a period of time. Not a huge amount, but there'll definitely be people that sat on the side that will surge into the market. And that means banks will get busy and won't need to drop the rate to you then. So you might, ironically, see the Bank of England drop the interest rate, but these lenders, if they get influx of business, might actually put their prices up. We'll be seeing what happens on that. And that's why we do these videos weekly, to see actually what the market is doing. Let me know if you found a lender that's better than any of these. It really helps everyone that collectively watches this. There's 200,000 of you that watch this channel every single month now. So do comment if you found a better lender. That would be really, really useful. Do smash that like button, guys. That really helps with YouTube. Check out some other content on the YouTube channel, including this video right here.